In late 2024, the sleepy Peruvian fishing town of Chancay awoke to the roar of cranes and the gleam of freshly laid concrete. What had once been a local harbor handling modest coastal traffic transformed almost overnight into a sprawling state-of-the-art container terminal. Behind the project stands Costco Shipping Ports, the Chinese state-owned behemoth, partnering with Peru's Volcan Compañía Minera in a 3.5 billion US dollar venture. When fully built, Chancay will handle up to 3.5 million TEUs annually, comparable to some of the busiest ports in North America and Europe. For Washington, Chancay represents more than commercial competition. It is a strategic pivot in China's global influence playbook, a tangible outpost of Beijing's Belt and Road Initiative, BRI, in South America, long regarded by the United States as its own backyard. The speed and scale of the port's rise have triggered alarm bells in U.S. policy circles, raising questions about economic marginalization, military dual-use potential, and the shifting alliances of Latin America. Chancay lies some 60 kilometers north of Lima, Peru's capital. Until 2023, its economy revolved around small-scale fishing and agriculture. Local fishermen, who once cast nets in the calm bay, found their livelihoods threatened as dredgers carved out deep channels to accommodate 17.8-meter draft berths, sufficient for the largest container vessels afloat. Within months, rows of gantry cranes and vast container yards replaced modest piers. By November 2024, the first phase, designed for 1.5 million TEUs, began commercial operations, cutting Asia-South America shipping times by as much as 12 days compared to routes via the Panama Canal. Peru's government hailed the project as an economic windfall. Estimates suggest Chancay could generate 4.5 billion US dollars in annual revenue and create over 10,000 direct jobs once fully operational. For a country still grappling with inequality and underinvestment in infrastructure, such figures are tempting. But for U.S. strategists, the broader implications outweigh local economic gains. Historically, the United States has been Latin America's primary trading partner and investor. Yet in the past 2 decades, China's footprint in the region has grown exponentially. Bilateral trade rocketed from roughly 12 billion US dollars in 2000 to over 450 billion US dollars in 2023, making China Peru's top trading partner and the region's dominant economic actor. Chancay is emblematic of this trend. By providing low-cost financing, cutting-edge construction expertise, and integrated logistics, China has outpaced Western rivals. In contrast, U.S. infrastructure assistance has often been criticized as slow, bureaucratic, or tied to political conditions. For example, when Secretary of State Antony Blinken visited Lima in early 2025, the U.S. offered to refurbish decades-old diesel trains for local transit, a symbolic gesture that pales next to China's multi-billion-dollar port investment. The risk for Washington is twofold. First, American exports and shipping companies may lose market share as Latin American trade increasingly bypasses U.S. ports. Second, the shift accelerates a broader realignment of regional loyalties toward Beijing, weakening U.S. diplomatic leverage on issues ranging from drug trafficking to climate cooperation. Beyond economics, Chancay carries potential military ramifications. Ports with deep drafts, advanced cranes, and expansive storage yards are inherently dual-use. They can accommodate naval vessels, including large amphibious ships or supply vessels, under the guise of commercial traffic. Former U.S. Southern Command head General Laura Richardson has warned that a Chinese-operated port in Peru could become a logistical node for the People's Liberation Army Navy, altering power dynamics in the Eastern Pacific. While Beijing publicly insists on Chancay's purely civilian purpose, the opacity surrounding operational agreements fuels suspicion. Costco retains a 40-year concession with options to extend. Its security protocols, staffing, and data sharing arrangements are not fully disclosed. For U.S. intelligence planners, any port under foreign military-linked control within 8,000 kilometers of the U.S. mainland is a strategic headache. Peruvian leaders find themselves navigating treacherous waters. On one hand, Chancay promises jobs, regional development, and integration into global supply chains. On the other, environmental groups and fishing communities decry habitat disruption. Studies by local NGOs indicate that dredging has disrupted benthic ecosystems, leading to a reported 25% drop in fish catches in 2024's first quarter compared to the previous year. Protests erupted in Chancay in December 2024, demanding stricter environmental safeguards and revenue-sharing agreements. The Peruvian government has attempted to placate critics by funding coastal restoration projects and establishing a local oversight committee. Yet long-term monitoring remains underfunded, and the promise of quick economic returns often overshadows environmental concerns. U.S. policymakers are scrambling to formulate a response. The State Department has quietly lobbied Peruvian counterparts to impose stricter environmental and transparency conditions on the port's expansion. Meanwhile, Congress is debating whether to levy counter tariffs on goods shipped via Chancay, though such measures risk collateral damage to U.S. exporters and could drive Peru deeper into China's orbit. In February 2025, the U.S. International Development Finance Corporation, DFC, announced a $500 million credit line for sustainable infrastructure in Latin America, with a focus on green ports, rail links, and digital connectivity. While welcome, critics argue this is a reactive move. Too little, too late. China's BRI projects in the region already total over $30 billion in committed funding, dwarfing U.S. offerings. Chancay's rise is not an isolated case. Across Latin America, from railways in Brazil's hinterlands to hydroelectric dams in Ecuador, China is using state-backed finance and contractors to build the infrastructure that Western donors once dominated. The result is a tangible shift in influence. Governments accustomed to U.S. aid are now beholden to Beijing for port operations, power grids, and transport corridors. For the United States, the stakes extend beyond trade balances. The hemisphere has long been a strategic buffer zone. Maintaining influence here underpins U.S. security doctrine from NORAD to counter-narcotics operations. As China embeds itself in critical logistics networks, Washington risks being cut out of decision-making loops on regional security, humanitarian assistance, and crisis response. Looking ahead, several scenarios could unfold. First, if the United States can streamline its aid mechanisms, offer competitive financing, and partner on sustainable infrastructure, it may slow China's momentum. While the DFC's new credit line is a step in the right direction, real impact will require rapid deployment, meaningful local engagement, and a clear narrative that U.S. investments come without geopolitical strings attached. Second, should Peru lean further into China, driven by lucrative deals, technology transfers, and security cooperation, Chancay may become a prototype for future ports across Latin America, prompting other nations to follow Peru's example and accelerating a regional reorientation toward Beijing. Third, growing environmental concerns and fears of overdependence on a single foreign power might spark a Latin American backlash. Civil society coalitions in Peru, Chile, and Argentina are already calling for stronger safeguards and diversified partnerships, and a multilateral framework for port development, potentially involving the Inter-American Development Bank, could emerge as an alternative to both U.S. and Chinese models. Finally, in the worst-case scenario, aggressive U.S. countermeasures, tariffs, sanctions on Chinese entities, or naval deployments could provoke a tit-for-tat escalation, straining Washington's relations with Latin American governments caught in the crossfire and undermining broader cooperation on migration, drug trafficking, and climate change. The megaport at Chancay is more than a collection of docks and cranes. It is a symbol of a new era in global competition. For China, it is proof that economic statecraft can win friends and influence far from its shores. For the United States, it is a stark reminder that influence, once assumed, must be actively maintained. Peru stands at a crossroads. Embrace the promise of modern infrastructure or guard its sovereignty and environment. Washington, too, faces choices: double down on reactive measures or craft a forward-looking strategy that leverages American strengths, innovation, sustainability, and local partnerships. As ships laden with electronics, textiles, and minerals slip quietly into Chancay's berths, they carry more than cargo. They bear witness to the shifting tides of power, where every container unloaded is a test of wills between two global giants, and a challenge to U.S. primacy in the Americas.